Hi everybody, Jason DeBono, President of New View Trust Company, and today we're going to talk about that silent investment partner that you have on most of your deals, and that is the IRS. Many people lose valuable dollars of their investment return by simply paying it in the form of taxes every time they earn money. And we're going to talk today about how to eliminate that on a go-forward basis as best as possible. So I want to start by talking about the power of taxes and what it really does to your investment return. So I'm just going to give you a quick numerical example of two different people. If two different people were to take $1, so the same dollar, they were going to take the same time horizon of 20 years, and they were going to double that dollar every year for the next 20 years. At the end of 20 years, the individual that made that investment in a taxable state whereby their silent partner was the IRS, and let's assume they're in the 25% tax bracket, when they get to the end of 20 years, they will have turned that dollar into about $75,000. Now that's a great investment, $1 to $75,000. But what happens is if they invest $1 and make $1, they have two. They pay 25% tax on that dollar, which is a quarter, and now they're left with $1.75. They reinvest $1.75 and they end up with $3.50. Then they pay 25% on the $3.50 and reinvest what's left. If you want to eliminate Uncle Sam from your life, it can have major impact to the amount of money that you make. So that same dollar, doubling every year for the same 20-year period, but this time the individual does it in a retirement account, so they're not subject to that 25% tax every year. And at the end of 20 years, that individual will have just over $1 million. So I want to ask you, when you're thinking about your investments, do you really know how much Uncle Sam is chipping away at those? So when we talk about self-direction and self-directing a retirement account, so many people just see this as an opportunity to move stock investments out of what they're uncertain of and move them into something they're more confident in, like real estate or private notes and private equity. And while self-direction is certainly a great tool for that, what many people really start to learn in the process is that they can structure and strategize their investments to eliminate Uncle Sam from the profits that each of those investments make. So when you're setting up a self-directed account, it's not only just a tool to invest in what you know and understand, but it's a tax advantage tool that's readily available to all consumers that eliminates taxation from our day-to-day lives on an annual basis. So as we talk a little bit about the different plan types and the different things that you can do, it's important to understand that the wealthy build their wealth by good investments coupled with good tax strategy. And self-direction gives you exactly that. It gives you good tax strategy with the ability for you to go out and make good investments. So when it comes to taxes, not only are the decisions that you make from an investment standpoint important, but you also have some decisions on what type of account you set up. If you choose a pre-tax account, you're choosing to defer the taxes and pay them at a later time, which is certainly okay. The drawback to pre-tax accounts is that when you withdraw it, you're going to be taxed. In addition, at 72, you're going to be required to withdraw money and pay tax because the IRS wants it taken out of the account. If you choose a Roth, you're choosing to pay tax today, maybe at a higher tax rate. But you're doing that so that all of the earnings inside your account grow tax-free. There are no RMDs inside Roth accounts. And at any point, you can take the pre-tax IRAs you've been deferring and convert them over to Roth IRAs, so long as you're willing to pay the tax in the year in which you make the conversion. So I want you guys to wrap things up here today thinking a lot about taxes, and while investments are always the thing that people talk about first when it comes to self-direction, I want you to make sure that even the same investor can yield significantly better results by just buying in a tax-advantaged manner. So we wish you all the best in your investments and are happy to help any way we can. Please use the links below for more information on resources and tools that will help you better understand the tax benefits and implications that are available and self-direction can help you avoid. All the best.